This is the first time I think in many, many decades that no one knows what's happening. Even the most skilled companies could become redundant over the next couple of years.
Scaling up power actually is a much longer process. So I think the world will get a lot more time to adjust. Often when things get cheaper, which is what's happening to AI, the cost is constantly falling. You end up using more, which may mean its potential that actually AI leads to accelerated demand for IT services.
So in quick commerce, you're noticing that businesses are getting stronger and despite stocks getting weaker?
So let me tell you, 3 years ago, I was a skeptic on quick commerce. But now in the last 2 years, we've been convinced the unit economics are working and people are getting habituated. The largest player in the industry is no longer losing money. If the biggest player in the worst point is not losing money, that tells you that actually the business has very strong ability to generate profit when things turn.
How are you looking at gold and silver now after the recent rally?
We are clearly getting a red sign on gold. Gold is a global currency. Now, when does gold do well? Gold does well in two circumstances. One, when there is high inflation, when paper currencies because of inflation are losing value, or there is significant uncertainty in the world. Now, if you believe that gold will continue to do well, you're believing the world will have more trouble. As I said, the world belongs to the optimist. So I'm not in that camp.
Given this volatile market, what should a retail investor's philosophy be?
You can't invest when things are good and think that you'll make a lot of money. You're going to make money if you invest when things are not looking good.
Do you think that it could take a longer time for this market to recover despite the macros improving?
I think
Hey guys, welcome to the Money Mindset. Today I have someone with me who's been in the industry and tracked markets for almost 30 years now. Ramesh Mantri is the Chief Investment Officer and founding member at White Oak Capital Asset Management. He has 22 years of experience in investing and financial analysis, and he leads the investment strategy, fund management and research teams, overseeing all their schemes with a focus on long-term performance. He manages over 30,000 crores in terms of AUM, or at least that's what the AMC does. Ramesh is also a CFA charter holder, holds an MBA from FMS Delhi and has completed his chartered accountancy course. Ramesh, thank you so much for being here on the show. It's a pleasure having you here because you've seen so many market cycles and this seems like this is a really tough phase where nobody knows what to expect next. So let's start off with what your worldview and India view is and then we'll take it from there.
Yeah, one of the most defining element of the worldview is the new. I worry less about geopolitics, because that's always been the feature of the world, right? But actually this AI, new technology, which in ways saying is humans' value lied in intelligence, right? We studied for 20 years to gain intelligence, expertise. And now you have a technology that can substitute or supplement our intelligence. And what is the role of human intelligence? So a lot of roles that the world prized, right, which is often built with 20 years of effort. What is their value in the years to come? That's a key question. And that has a huge impact on how, economies function, societies function. What do you tell your children to do, right? What do they need to do in their careers? Very fundamental shift. And there's a lot of uncertainty on that.
So what's your best guess on how this will play out? Do you see it play out in a doomsday kind of scenario where jobs are taken, consumption drops, unemployment, surges? Or do you think that just like earlier years when innovation kept, coming through, people just evolved with it? How do you see it play out?
Yeah, so, at every point when a new technology came in, right? And I'll go back to, when we invented, let's say, the car, right? And people thought, what'll happen to people who drive horses, right? Horse carts, right? They lose jobs, right? And actually you can see the auto industry created expanded markets. The concept of a suburb emerged with cars coming in, right? Otherwise you would have to live, because if your distance of travel is limited by horse carts, you couldn't live far, right? Or work from far. So actually auto industry created a huge market. If you think of a more recent example, when computers came in, and remember banks used to work with physical ledgers and physical bank statements. Even in India, the banks went into multiple strikes opposing computerization. But what happened? Did the number of jobs in banking grew? Did the number of branches grew? The answer is yes. So the key point here is the skills and jobs will change. So you probably don't require the horse cart driver. You don't require the physical cash counter because now you have an ATM machine. But new roles will emerge, right? Which we sometimes we don't even know the answers today, because when the auto came in, at that point you could not envisage how big would be. Even a large business would emerge, like running even auto dealers or even garages, right? Garages is a big business, right? So we can't envisage, but the world has always seen this defining technologies at different point. In fact, what is called growth is nothing but a new technology emerging. And
There is an argument to that, right? Because all of these technologies in the last 3, 4, 5 decades have never been smarter than human intelligence. This is the first time where there is a technology that can supersede human intelligence. So, even if the roles evolve, there will be fewer people required to do those roles. And then what happens to the rest?
no, that's a great comment, and I don't completely agree with that, because even the calculator was faster than humans in calculating. A lot of computer functions, even before AI, were much faster than humans can process. So that's a path. It's not like machines have not done much better. I think the roles that we humans did will get substituted, but new roles will emerge. So when a new technology comes, the past skills may become less valuable, but new skills are required. And the challenge really question to ask is, can we retrain ourselves? Can we evolve ourselves to the new requirements of the world? That is the key question.
So, as market watchers, as market observers, and somebody who's tracked this entire space for decades, how do you see the market and investment opportunities evolving over the next couple of years?
So one, you have to be a lot flexible and open-minded. I think it's always good to say, I don't know. But this is a time where you have to say more, I don't know. At the same time, believe in the thousands of years of human civilization, that the world has progressed and found better ways of doing things. So you have to be a long-term optimist. At the same time, agree that you don't have answers today. At the same time, there are a lot of things that will not get changed by AI. There are things that we already know are benefiting from AI. So there are at least two vectors you understand, some of those things that will benefit from AI and things that are not getting impacted by AI. So at least those opportunities are there. And you have to keep an open mind, and remember, whatever I said today may get challenged with the fast pace of AI evolution, or maybe a few months later. So you have to constantly watch the developments, keep an open mind, and see how this evolves.
So, when you talk about investing, right, this is a market that has not given any returns. In fact, it's eroded wealth for shareholders in the past couple of years. Do you think that this time-wise correction, as they're calling it, is something that could continue? And what's your market view now?
See, I think, last 18 months, if you look at the large caps, you have not generated returns. In small caps, actually, there has also been a price correction. So if you think differently, typically markets deliver, historically, India has delivered 12-13% long-term return. So you can say 1% per month. So if for 18 months, the market does not deliver returns in large caps, the market is cheaper by 18% from the previous, when the last time it returns. So valuations have corrected. So that's at least it's 80% cheaper from what it was 18 months ago. In small caps, it's a lot more cheaper because price is also corrected and time has passed. So probably small caps have corrected by 20 to 25% over this period. Number two, I think one of the biggest reasons why, of course, Indian markets have not done well is one, we had a local growth slowdown, right? And there is this AI story that emerged globally, and India, of course, did not have a direct play on the AI. In fact, there's always a worry whether Indian IT gets adversely impacted by AI. So that's why the Indian story lost momentum. But now, as we stand today, while there still remains concern on what happens to IT, but I think the domestic story is getting better on many attributes. First is, I think the domestic macro remains very strong, whether it is, the interest rates, which have come off, inflation, which has been 20-year low, fiscal deficit, which has been managed, and bank balance sheets being very strong. And the government also continuing to pursue a pro-growth stance, particularly with rate cuts and capex and focus on infrastructure. So I think the domestic story is picking up, and the government has showed intent with the income tax cut, with the GST cut, that they want to get growth back in, right? So I think a lot of things are aligning. So I would say it's a more normal time to invest in equities. We run asset allocation models. Our asset allocation model that we run today, in the last 3 years, it's the highest level of equity in the model. The previous time, I'll tell you when it hit the lowest level of equity in the model was September 24, when the market peaked. So our models are telling us this is the right time to invest in equities. And I want to remind you, equity investing is, or generally investing is a place where you don't get comfort from other people's behavior. It's not a social activity. So you have to invest when things are not looking good, if you have to get the fruits of when things will get better. You can't invest when things are good and think that you'll make a lot of money. You're going to make money if you invest when things are not looking good, but you have to be that optimistic and believe things will get better. And things are getting better.
So the macros are getting better, but somehow it's not translating into earnings just yet. And now with the way AI is evolving and the possibility of more job cuts, etc., maybe consumption could get hit. Do you think that it could take a longer time for this market to recover despite the macros improving?
So it's almost impossible to predict how the market behaves in the short term. So I'll give caveat that I can't predict what does the market do. But I would say in terms of earnings, the September quarter, when you can say the economy partly got impacted with the GST, the 5 weeks between the announcement of GST cut and implementation, there was a break in the economy. Even that quarter, earnings were better than estimates. And this is the next quarter where we got impacted by the hefty US tariffs. Again, the earnings have been much better. So earnings are clearly surprising. And even December quarter, we had double-digit earnings growth. And in fact, number of small caps also have done well. So I think the earnings trajectory has changed. And mind you, the benefit of lower interest rates are also still flowing into the economy. So when we talk to companies, I think things at the margin are improving across the board.
So everything that you've mentioned, right, Ramesh, is positives for the market, but somehow it's not translating into the market up move. Where do you think the challenge lies?
No, I think still there's a lot of focus on AI opportunity and the fact that how it impacts Indian IT. That's an answer we don't have today. And probably we won't have an answer for quite some time. So that's the real worry, right? But otherwise, outside that story out of India, I think the rest of the story looks good. I think we always get focused on what happens in a time. The way I look at it is, I like things when they're cheaper, right? That's how you make more money. So if equity markets have corrected this year, that's more value and I should be investing more.
But you don't get phased by these imponderables in the market because, like you said, this is the first time I think in many, many decades that no one knows what's happening, right? Even the most skilled companies could become redundant over the next couple of years.
No, even if, let's say AI is a very disruptive technology, it's going to take much longer to get there, right? It's not going to be here and now. And the reality is that the constraint, the kind of compute that's required, the key bottleneck, apart from, semiconductor GPUs available, is actually power. And scaling up power actually is a much longer process. So I think the world will get a lot more time to adjust. So, and that's the way humans evolve. If you think about imponderable, let's go back 5 years, 2020. Just think, what were you thinking in March 2020? End of world, end of humanity. But remember, a vaccine that takes 10 years to develop. In 10 months, the world collaborated and created a COVID vaccine.
And that was actually the best time to buy.
The world looked like ending in 2008-9.
Yeah.
India's story in 2013, right, with our 10-year bond at 10%, inflation at 10%, rupee crashing. The India story also looked getting over in 2013. So I have seen the story very difficult environments at different points of time. But both India and the world only have grown stronger over time. So that's why you need to be an optimist.
Do you think there's some degree of confirmation bias that a lot of you fund managers have purely because of how much you are invested in the market? I mean, I'm not just talking about you, everyone, right? All of us are invested in the market. So it just serves us to believe that this market will do better over time.
No, I think the world has worked for the optimists. If you look at the story of human civilization, It's a story of where optimists have won and pessimists have lost. And the humanity has seen, and India as a country has seen multiple crises. Just look at the last 30 years, 35 years of India's transformation. We had to pledge our gold. We went through multiple coalition governments. Governments fell. Oil prices volatility happened. We had, terrorist events. We had conflicts. We had scams. We had economic crisis. We went through large number of challenges. Yet, when you look at the picture, you wish 35 years ago or even 15 years ago, you had all your money in equity, right? Not much better than even real estate. So the point I want to say is, I think the real point to understand is the world belongs to the optimists. And equity investor means you're an optimist.
I agree with you. I'm with you. I'm equally as optimistic as you are, just that the data points sometimes, cause us to kind of question what's happening. But since you spoke about AI and tech, right? You have a Midcap fund that has a lot of tech stocks, Midcap technology companies. There's Coforge, Persistent Systems, etc. I want your outlook on Midcap tech companies. Do you think they can survive in this AI transition? What is the kind of work that they're doing? And how do you see this entire space evolve now? Because stocks have become very cheap, but then every day there's some new analysis about how the tech guys in India are going to lose out.
So this is one thing where I can be proven wrong in a very few months, the pace at which AI is evolving. But let me give a more considered view. I think what is the role IT services companies do? I think businesses understand their own business. The tech companies, the likes of Google, Amazon, or now OpenAI, Anthropic, and all deeply understand technology. But there's someone in the middle who understands both technology and businesses. A bank, what are the business needs of a bank from a technology perspective, and understanding what technology applies. So the IT services role is to marry the two. Now, because coding is getting a lot more efficient, remember I'll give you an example of banks, because a lot of these banks tend to be very old organizations. Like if you look at the US banks, many of them work on mainframes. These are technology of 60s, 70s, 80s. They written over millions of lines of code. Nobody dared to touch this because the cost of replicating and the error that happens there would lead to disaster in a bank. Now there's a potential that with the AI helping in coding, you could rewrite those codes. And that requires a lot of investment. Secondly, everyone, if you ask any large company, the key question the board is going to ask is, what are you going to do about AI? Now remember, the normal business doesn't understand AI. So what would they go? They would go to one of these technology services companies and say, I am in this business. Can you help me with AI? Now, this company understands both the customer needs and also understands the technology. So they'll marry both. So often when things get cheaper, which is what's happening to AI, the cost is constantly falling, you end up using more. That's happened to the world everywhere. Anything that gets cheaper over time, we end up using more, which may mean it's potential that actually AI leads to accelerated demand for IT services. It's a potential path. What the IT services companies do will change. Less of coding, but more understanding business needs. Cybersecurity, a huge issue, because remember, a lot of businesses are just information. Just think of our money. Our wealth is not today sitting in cash or lockers, right? It's sitting in a bank statement. It's sitting in numbers, right? Our wealth is what today in numbers, set of numbers. So how much information security matters? So a lot of things, I worry about information security all the time, right? So there'll be a lot of different opportunities that can emerge. And remember, human beings are ambitious people. We are never satisfied with our presence. So let's say if we can solve some of our current problems, what are we going to do? We'll say, let's build a colony on Mars, which is what Elon Musk wants to do. See, humans are never happy with status quo.
Human desire is endless.
Yes, the desire is endless. Whatever our state is, after we get to a certain state, we become unhappy with our current state and we want the next state. That part of human behavior is never going to change. So if new technology comes in, we want to use that to get to a next stage. So that itself can create demand. But I don't know the answers. Let's be honest about it. It's a fast evolving space. Let's keep the humility. We don't have the answers. But it'll depend on the execution, whether these companies can execute or not. Even as we space some of those mid-cap IT companies, while the large companies are growing at 5%, these companies are still growing at 15-20% on dollar terms. So that's what good execution is.
No, but an interesting point you made, and I totally get that about human desire. It's the Maslow's hierarchy, right?
Yeah,
I mean,
yeah.
beyond a certain point, you keep wanting more and more and more until you reach a place where you realize it just doesn't give you happiness.
Yeah, but happiness is a very difficult ephemeral goal. The material needs are constantly required, right? So why do GDPs grow? Because the human need, desires never end, right? So I think that you know rat race or treadmill will always continue.
So, is it fair to assume that you're bullish on tech as a sector overall, or is it just mid-cap technology companies?
So as I said, as of now, our stance on technology is neutral because we don't know the answers, and I think not anyone knows those answers. Within that mid cap, because we believe these companies are far better positioned in terms of the kind of businesses they have and the kind of management teams they have.
And they can adapt easily because
We
of
believe
the
these
scale?
companies are more likely to adapt. Beyond that, we don't have an answers.
Okay, fair enough. You have a multi-asset fund as well, and I want to talk a little bit about that because I think 6-8 months ago you reduced your allocation in gold. Did you miss out on a large part of the gold rally? Any regrets over there? And how are you looking at gold and silver now after the recent rally?
Yeah, so see, I think let's understand gold. Gold is a global currency. Before the Bretton Woods happened and the US dollar standard came in, for 2000 years, the world traded in gold. Countries and kingdoms, they were not even countries, they settled the trade in gold. So gold has that 2000 years plus of legacy of being the currency of the world, and that does not change. Remember, the paper currencies or the hard currencies, what they call them, have been only around for less than 100 years, right, in their current role. So that way, gold is getting back. And the beauty about gold is that when you own a dollar, you're trusting the US government. When you own gold, you don't need to trust anyone. You have the gold. So that's the difference between owning any other currency and owning gold. Now, when does gold do well? Gold does well in two circumstances. One, when there is high inflation, when paper currencies, because of inflation, are losing value, or there is significant uncertainty in the world, a lot of geopolitical problems and all. The last time the big massive move gold made was in 70s, and there was a big rally in the 2000s also, but 70s was the defining when the world went into chaos, right? So now you had situation with the US administration policies, particularly after Ukraine war, a lot of geopolitical uncertainty. And by the way, the US also has been running high inflation. For 5 years plus, India's inflation has been lower than US inflation. So there is inflation and there is so much political uncertainty or geopolitical, also because of the US administration policies. So gold has benefited from the trouble in the world. Now, if you believe that gold will continue to do well, you're believing the world will have more trouble. As I said, the world belongs to the optimist. So I'm not in that camp. And remember, if gold does well, very well from here, that means every other asset class
will not do well.
Particularly equities, real estate will not do well, because that means the world is going in a very difficult direction. As an optimist, we are not in that school. Number two, when we run our asset allocation model, what we do for our multi-asset fund, we are clearly getting a red sign on gold, which means gold is an insurance policy. It has played out its role in the last 2 years. But now this insurance is no longer required so much. So that is why today gold is at the lowest level in exposure. And by the way, I don't regret that. No model works. But I'll just give you an interesting data point that's very important. Is we had 24% in gold in June 24 when everybody was invested in equities. And September 24 is when equity markets topped out. So we had the highest exposure to gold when nobody was talking about gold. That is what you need to do in investing. Buy into things when it's not popular. Silver, I have very different opinion on silver.
But I want to complete the gold argument first because, it's a kind of a hot take, right, from you, because everyone's bullish on gold and you're at the other end of the spectrum. Fair enough. That's what contrarian buying is, contrarian investing. But what about this whole argument of de-dollarization and what China is doing, accumulating more Chinese central bank accumulating more gold, etc.? Do you think that whole story has played out, or given the way Trump's decisions, arbitrary decisions are, there could be one last leg of a gold rally?
Yeah, there's no way to predict last legs. We have no ability, I can tell you. I'm just talking of, where, what our models are telling us, you know, and relative valuations. See, I think regarding de-dollarization, I want to give an important point is, if I give a choice to anyone that apart from your own country's passport, I give you one more free passport in the world, which country you would want? I can bet that large number of people will prefer the US passport.
That's today,
Yes.
but maybe not the case 10 years from
No.
now.
Let me put that argument differently. Which country is the most innovative country even today? Where did the AI technology come from? Where did the EV technology come from? Where did this GLP drugs technology come? US remains the world's most innovative economy first.
But China is giving it a good fight.
Yes, at the margin, true. But I'll give you a choice: is you get to buy a house in New York versus Beijing. Where would you choose to buy an apartment? Where you think your property rights will be safe, right?
I would choose Tokyo, maybe.
Yes, that's a nice city. Uh, but the choices are these two only, right? I'm not giving you other choices. So I think the point I want to come to is US remains the world's most attractive economy for talent. That's the key point. So today people want to immigrate into US. There's a huge queue to get into US. And the US structure of capitalism, where you can come from anywhere and you can create in a short while $1 billion businesses. Just look at the whole AI space, right? How many of these companies have been created by immigrants and in a short period? That's only possible in US. Just imagine why you don't have large value companies in AI in China
Or India.
or India at a startup level. I'm not talking of established players. That tells you, see, remember, when you get into a new system, you want the system to be in your favor versus the system to be favor of established players. So US has the dynamic. It's the most entrepreneurial economy, most attractive place to work and live. And that is not going to change, right? I don't see that change. Yes, China at the margin is getting a lot better.
But all of this, Canada meeting China and a lot of the transactions happening in other currencies, you think it's all optics? You don't see a larger game here?
I'm no expert on all the geopolitics, let's be clear about it. But I don't think the attractiveness of US. In fact, when you look at the mix of global trade, in which currencies they've happened, despite all the talk of de-dollarization, actually US dollar trade has not gone down. It's actually the global trade in other currencies, particularly the pound and some euro, has gone down. So remember, at one point of time, the pound and the euro were big currencies. Actually, they have lost share, not the dollar.
Okay, that's interesting. So, so far you are bullish on equities. You feel that the correction is now done and valuations have corrected and earnings are picking up. You're bearish on gold. You're cautious on gold, rather.
See, gold is a good insurance policy. So there's a role for gold in every portfolio. Even our funds, our multi-asset fund continues to have gold. But believing that gold is going to be a great trade from here means being bearish on the entire world, on every aspect of it.
Okay, fair enough. I was going through some of your fund performances also. Your Midcap fund has seen over 26% returns if you take a 3-year period. I want to understand a little bit about your investment philosophy. What is your investing style? And given this volatile market, what should a retail investor's philosophy be?
So while we did talk a lot about the high level picture, I think our investment philosophy is actually to be very bottom up. We start with the view that beyond a point we don't understand the world. So keep your ego in check. You focus bottom up on a company by company basis. You evaluate every company on its merit. Study the industry, the competitive dynamics of the business, understand the growth potential, and understand the management DNA and capabilities. be very bottom up on understanding opportunity, and try to cover a large number of companies. You know, one of the investors who inspired me to come to equities is one of the greatest fund manager in my opinion is Peter Lynch. And if you read his book, he says actually is if you turn 10 rocks, you'll find something more interesting. He just said, look at more stocks. You'll find more interesting opportunities. That's what we do. So we invest disproportionate resources on research, try to have the widest coverage of stocks in the market, and be bottom up. So the portfolio is made bottom up. And then from a top down perspective, we apply layers of risk management. So the idea is bottom up. Let us say I should not be invested a large amount of money in IT because we don't know answers. At this point, there are no right or wrong answers. We have no clarity on IT. So don't take a large bet on IT, either strongly in favor of IT or against IT, because one of the bets is going to be wrong big way and we don't know the answer today. So keep a balanced portfolio, but the stock selection is bottoms up, and spend a lot of time being on the ground, visiting companies, visiting plants, sites, talking to management, customers, vendors, trade partners, industry experts, talk to ex-employees. It's not, you don't want data, you want to understand culture, how organizations behave, and spend a lot of time doing these things on the ground. And sometimes brilliant insights and ideas are going to come. Even watching carefully the management, DNA, where do they spend their time? So remember, building a great business is very difficult in a competitive world. So you want to see what managements do, right? Which means where they spend their time. Ultimately, what people do is where you spend your time.
Absolutely. So, a couple of questions here. I noticed in one of your funds, in fact, most of your funds, you have quick commerce companies, the largest one, Eternal, of course. And we've seen a huge bear market play out there, right? I mean, Eternal, for example, is down almost 30% in 6 months. What do you do when such drawdowns happen? Do you stay the course because you believe in the macro story, or do you then churn out?
Oh, so that's a great question. See, first of all, we are not looking at trading or technical answers to sell out of stocks or stocks down. I think the core idea is to focus on what's happening to businesses. As times passes, is the business getting stronger or the business getting weaker, right? That's the real core metric. So if let's say the business is getting stronger, but the stock is going down, that's actually more value. You should be logically adding more to those positions, right? On the other side, if the stock is going up and the business is getting weaker, you should be reducing or selling out of those positions.
So in quick commerce, you're noticing that businesses are getting stronger and despite stocks getting weaker?
So let me tell you, 3 years ago, I was a skeptic on quick commerce. I did not believe that you could make money in the business. I understood the customer need, that I would love to get a packet of milk or a bread delivered to my home at 10 o'clock in the night, right? That's a great customer experience. I'm not sure the unit economics work, but now in the last 2 years, we've been convinced the unit economics are working and people are getting habituated. It's no longer one you're doing thing. In my home, the entire grocery comes on quick commerce. We stop buying planned grocery because everything just comes on demand. Even as basic as a atta or a rice comes on quick commerce. So we have got deeply addicted. Just for example, we all got addicted to food delivery. 10 years ago, there was very rarely you ordered food at home, right? You actually fetched yourself, picked it up and all. Now home food delivery is now a habit. So quick commerce is slowly becoming a habit to one portion of the people, and the unit economics are working. Like for example, the largest player in the industry is no longer losing money in an industry which is currently brutally competitive with new players jumping in every quarter. If the biggest player in the worst point is not losing money, right, that tells you that actually the business has very strong ability to generate profit when things turn.
But then why are stocks not doing well? I mean, for example, Swiggy, right? It's given no return since listing to investors. Zomato down almost 30% in 6 months. Despite, I take your point, the use case is very, very strong. Everyone has converted, but stock prices are not reflecting that.
Oh, see, I think clearly, if you think of the market concerns in this business, is a lot of new players coming in. And remember the big giants of e-commerce, right? Amazon, Flipkart. they have realized that their core e-commerce business part of is under threat from the quick commerce. Because if you can get a phone delivered in 15 minutes, iPhone, why would you wait for a day? Because instant gratification. So they are feeling their core business is under pressure, and they're also jumping into this. So everyone who's in, and even remember, someone like a physical retailers are also getting into quick commerce. So as of now, we are in a land grab mode. There's tons of capital pouring in. We have seen this cycle play out in telecom. Remember, initially telecom was very profitable in India, and then we had dozen players in telecom in
very
India.
few survived.
2.5, practically. Only 2 players actually doing well. But that's this. But none of us ever doubted the potential of telecom, the need for telecom. We are all addicted to telecom right today. So eventually, the 2 surviving players have created tons of value and will create more value. So similarly, this space, I think everyone now, a lot of people understand that this is going to be a large market out there. There's a customer need. People are willing to pay money. But there's uncertainty who's going to be the ultimate winner and how long this bloodshed lies out is going to be there. There's bloodletting happening now, and it'll continue for some time. At some point, the weaker players will start folding because they no longer have. It's happened the same in the telecom. People ran out of money and they had to shut shop. It's going to happen in the same space. And what is going to happen as stock prices have corrected? The weaker players will struggle for funding. That's a way of reducing competition, right? So actually, if you're a long-term investor in this space, at this point, you don't want high prices of stocks. Because what means, let's say if the leader has a very high valuation, that means the third, fourth, fifth, sixth player will get funding, which will create pain to everyone in the system. So logically, if you're running a business in this space or a long-term owner, you actually want lower stock prices, because the lower stock prices will dissuade the fourth, fifth, sixth player to get funding. So you're, by not getting
eliminating them.
Yes. So you have to understand, it's a cycle of pain that needs to be endured for the body to get better.
So would you buy more now after the fall?
I would not comment on that, but of course, I would not specifically comment on stock price actions.
No, fair. I mean, I'm
remember,
asking, and the sector as a whole.
And remember, we are all data driven.
Yeah.
So, every few months we get more information. So every few months we have to revisit our investment thesis.
No, I take your point entirely. I mean, I'm very bullish on quick commerce, for example, but it's just a little bit of a disappointment to see the way the stocks are coming off. But I take your point that eventually this cleanup has to happen for, a 2-player market to evolve. And it seems like the largest 2 are the ones that are going to survive.
See, it's such a large pot of gold and such a large market. Everywhere in the world, retailing happens to be one of the largest industries, So there's no reason to believe everybody will not try to get into this space. At least will attempt. So if you show too big a pot of gold today, more people will jump in and make the pot of gold smaller. So actually, lower stock prices are actually good for the existing companies.
Okay, very interesting. In your Midcap fund, you have a lot of pharma names. Alchem, Fortis, Ipca, Mankind. Of course, some of them, like hospitals business, has done phenomenally well in the last 3, 4, 5 years. But tell us a little bit about this pharma theme and how it could play out.
So, pharma theme can be, in multiple vectors. You have the branded generics in India. You have the generic, which goes into the US, the developed market. And then you have the CDMO space. So while in our portfolios where we like more attractive business, one is the branded generics in India. Again, it's a very fragmented market. At any point, there are always companies that are doing well. So that's clearly, and the beauty of pharma is it does not get impacted by economy. It doesn't get impacted by what the US administration does. I'm talking of domestic pharma, or even what the Indian government does. Because you fall sick, you need a medicine tomorrow.
And you'll get it also.
Yeah. So that's a great long-term compounding sector. Within that, certain companies will always do well. So that's a very large opportunity out there. Then the US generic, of course, is very competitive and also has a lot of interplay of the US policies. So we're typically underinvested there. And then the CDMO is where India's capability on research and manufacturing is getting combined. So, for example, IT is what? IT is basically human intelligence at work, but we are not manufacturing in IT. We're just delivering a software or code. In the whole CDMO space in India, we are working on both delivering research, right? And then also manufacturing once the molecules are approved. And remember, globally, the cost of new drug development has gone up a lot. I hope AI changes that we are able to deliver drugs earlier. That's going to be great for humanity. But the person who's going to work on that early research is the plant where the first samples get manufactured is the plants that are going to manufacture. Remember, 50% of the US generic supplies come to India. India is the world's pharmacy, just like India is the on the tech support, the tech bone of the world. So it's a great sector again. These two, and of course, healthcare has been doing stellar, right? I think the aspiration to live longer is always there. You want quality healthcare. No, one of the struggles with hospitals, they tell me, is nobody wants to stay in a ward. People don't even want twin sharing rooms. And then people want suites, just like you
Like
want
a hotel.
like a hotel, because now healthcare has become an experience, right? So clearly, if people have money, they want to go to private hospitals, and with the advent of health insurance, it's a great sector. This is one sector which does, irrespective what happens to the economy or market.
But I have one question here. A lot of this has played out, right? I mean, if you look at Fortis, for example, it's up to 300% in the last 5-6 years. You think this is something that the story has played out?
See, healthcare is a very large opportunity out there. And unlike the West, some countries of the West, in India, incremental healthcare capacity is only coming from the private sector, except a couple of states which are doing a good job. So, in fact, there's an acute shortage in large metropolitan areas of healthcare beds. And in fact, the capacity is not coming at fast enough speeds. One of the, when we talk to hotel operators, when you say you're adding a lot of capacity, he said, I don't have rooms. Please understand, I don't have beds. So there is a lot of demand, and also the advent of this, healthcare tourism. Again, India offers very quality healthcare at affordable price, medical tourism. So I think healthcare story is a long way to go. It is recession proof. People are just going to spend money. That's the only spending pool, remember, where people sell their house, pledge, take a loan to spend that money. So it's one of the most secular growth sectors in India. And invariably, when markets do badly, healthcare sector does well.
Ramesh, it was a pleasure speaking with you. We've run out of time, but I have two last questions. One, for that 20-year-old, 30-year-old, 40-year-old who has invested in this market and is very disillusioned by the last couple of years, what would your advice be to him or her?
So I think the advice will be that nothing happens in a short period. If you're a 20-year-old, you spend maybe 18 years getting educated and building skills, but you never doubted the value of that education, right? Because it will pay you off long term. So similarly, you have to believe in the power of investing. No miracles happen in 1 or 2 years. Have patience. Every year is not going to be the same, just as it's not been in our lives, right? But remember, since I have seen India, we have done exceptionally well. We are one of the best performing markets over a very long period in the world in dollar terms, not in rupee terms. So that is for last 35 years, this country has gone through a metamorphosis, right? We have seen so much political instability, crisis, scams, geopolitical problems, yet we have done well. There's no reason we will not do well. And that is the real optimism you need to have. Investing requires you to run marathons, not 100-meter races.
And final question for that young Indian who is watching this entire AI story play out and feeling that doomsday scenario where jobs could be scarce, spending could fall, no one has a guarantee of which way your investments could go. What would your advice be to them?
It's a very simple answer. Yeah, instead of AI being used against you, you use AI in your favor. Skill up. Immediately start spending some time, learning AI. I'm personally spending time, learning AI, right? So it's
what are you learning in AI?
Yeah, so there are, so I'm trying to go back to coding. I did coding like 30 plus years. But now I realize that you don't need to know languages. You need to understand your problem statement.
Prompts.
Prompts. Actually now, it's not the code that is the skill at the margin, but what is the need you have? What is the problem that the code has to solve a problem for? That I, of course, understood. I did not know the coding. So for me, life has got better, right? Because I understand what the problem needs to be solved, but I don't know how to solve the problem by code. So now we have technology, make AI your tool in your skills. And I think every skill that requires knowledge, which processes knowledge, and by the way, that means a lawyer, a financial analyst, IT, or even a doctor. You need to start using these tools and get better. Try to aspire to be in the top 10% on the skill.
But now if you have 30 years of research experience and I don't, but now with AI, you and me are both equal, then what happens to the future?
I don't
of
think
jobs?
that answer is that we are equal, right? Because probably the code can come in, but what problem needs to be solved is that comes with experience. And when the problem is wrongly solved, knowing that the problem is the answer is incorrect requires experience. So I don't think the power of human intellect is going away. You just need different sets of skill. You will still have to apply yourself when the machines go wrong. And what the machine has to do, someone has to instruct. So I don't think, yes, it's getting easier. So we should be happy for this, because the world was constrained on getting a lot of, it's an opportunity for younger people that they can go up the learning curve very quickly. But I don't think the skills become redundant.
Okay, Ramesh, thank you so much. It was a pleasure having you on the show. And hopefully the next time we meet and chat on a different topic, the market will be much better than it is today.
Sure. Thank you.